just going to show you a bunch of different ways that I personally like to trade, ways that I like to get into trades to have some, some sort of an edge in the market. That way you're not getting in at the same time as everyone else. And, you're paying top dollar for the option premium. So let me just show you some different ways that you can think about maybe trading these different strategies that we have, whether it's a breakout, a bounce, whatever it may be. So one way that I really like to trade breakouts is buying into weakness and selling into strength, especially when I'm trading option contracts. Okay. So if you guys don't know, when a stock breaks out from a key resistance or it breaks out from a key support, the option premiums are going to get a big bump. Okay. They're going to get a big bump because everyone is buying at the ask, which causes the premium to increase in value. Okay. So one way that you can kind of avoid yourself from buying into at the highest price option, premium that's available when it breaks out, you can wait for the stock to break, hold above the level, and then buy into the dip. All right. So you're not like literally buying into weakness. If the stock is going down, you're not buying into that, but you're buying into weakness as an uptrend is forming, right? So after a stock breaks out of a key resistance, then you'll pick it up on the dip. That's what I mean by you're buying into weakness. And that way you can get a really nice average for your option contract, okay? And then you want to sell into strength. So selling into strength, that means as the stock is moving in your favor, you want to start selling out, okay? If you wait for the stock to start pulling back, right? Like you bought this, you bought the breakout, the stock starts pulling back, then that's when other people are selling out of their position. They're hitting the bids on the option premiums, and that's going to cause a drop in value. And you may get out at a worse price than if you were to sell while everyone else is buying. Okay, so buying into weakness, selling into strength on breakouts. Also, I'll show you, on bounces how you can do it. All right, so again, wait for the stock to break out on strength, pick it up on dip. So this is just an example. This was back not even that long ago. Okay, November 12th. So a little less than a month ago. So I said Netflix over 666. So Netflix, you can see, had a nice run on day one. It opened down here like 650, made a high of 666. And that was basically the resistance you can see for this day one. The resistance was 666. That's where, the stock came up, made the high of the day. It tried to hit that again later, like 30 minutes later, and rejected that 666 again. So, you're looking for a day two breakout of that level. But one way that you could pick this up is you wait for the stock to break the level. You're looking for volume on the breakout, and then you want to buy it into dips. So you can see it had, one green candle closed just slightly above, and the next green candle was also very strongly above. All right, so on this third candle right here, where you can see that wick come down, that's where you can buy into a dip. All right, or you wait for the stock to start running up, and then you can pick it up when it comes down to like the 8 EMA, right? You could buy on this dip right here. And wait. Maybe you pick it up again over here on the 21 EMA, all right? So waiting for the stock to break out and then buying it on dips is going to give you some sort of an edge, if you just buy right here at the top of this candle, because then you're buying at the very, the top premium value that you could be buying on the breakout. And that could potentially, cause you to stop loss early, because if the stock dips at all or it pulls back, then you may want to stop loss because you got in basically at the high on the breakout. So one thing you want to do is wait for the stock to break out on strength, hold above the level, and then pick it up on dips. Same thing with bounces. So like our, those morning bounces that we like to post. So these are like, here's an hourly chart for SQ. Again, so we're picking up bounces on weakness after a strong trend has been created. So you can see on Square, this was day one. Very, very strong, right? It opened down here, 235, closed the day up at 247. So basically day two, you're looking for a bounce on this square. Okay, so I do a lot of day one strength, day two bounces. All right, strong day one, bounce day two. So the square 1 hour, all you're doing is you're looking for it to come back down to, one of those key moving averages, 8 EMA, 21 EMA, all right, maybe 50 EMA, but it's usually going to be the 8 or the 21 that it'll pull back to. So you have a strong day one, you buy into the weakness on day two. So you're buying into, Unraveler talked about the bounce strategy, right? So you're buying into the bottom of basically the trend that is being created, right? And you're bouncing off of that. So you're picking up bounces on weakness after a strong trend has been created. There you go. You can see it here as well. So SQ had just this really nice day one, made a massive run, 232 low, 247, 246 close. So a very strong day one. You look for a bounce on day two, and that can be based on, like I said, kind of like pre-market demand. It can be based on that moving average on the hourly. I think it's the 21 EMA right here on the hourly, or you can use Fibonacci. There's a lot of different ways that you can find these bounces, but there you go. So this is the strategy that we like to use a lot for entries. We like to get some sort of an edge. If you're buying into a breakout, if you're buying like over 248 here, yeah, it might be a great trade, and it could have been right here, but you don't really know if it's going to pull back or not. So that could potentially cause you to stop loss just based on emotions if you get in over a level and then it pulls back. If you're buying into a bounce, there's not a lot of room for error, okay? So again, here's more ways. Buying into weakness, selling into strength. So I posted I was picking up BA on a dip if this candle closed strong. So I was looking at the 5 minute, I have the 1 minute here, so just so you can see like the fills, right? But this is at 9:36, so 6 minutes after the market opened. I wanted to pick up BA on a dip after the next 5 minutes. So basically at 9:40 a.m., if that candle closed strong, then I would want to pick BA up on the dip. So basically we're just looking for momentum, right? We see a strong first 5 minute candle. We see a strong second 5 minute candle. Maybe we can pick this up on a dip on that third 5 minute candle, right? So again, we're buying into weakness, selling into strength. And you kind of see the fills here, picking up some equity, 220, 229, 229.5. So it had this nice run up, and then again, like 940. So I waited for this candle to close strong at 940 right there. You can see at the bottom, it was basically the little intraday high from the morning. It pulled back down, okay? And again, this is the 1 minute, so you can just kind of see. So I picked up 229, 220, 229.5 as it was pulling back, all right? And then you can see my sell. So I'm selling into the strength. I didn't wait for the stock to start pulling back. I'm selling 230, I'm selling 230.20, 230.30, 230.40 as the stock is moving in my favor, right? Even more so if you're trading options. So why did I choose to trade BA of all stocks on this day, right? So just looking at this example right here, again, I was looking for BA to pick it up on a dip after the second 5 minute candle closed strong. So why did I choose to trade BA? Well, I want to go back to day one. Remember what I said on day one, the rule and key to success: find the stock with the highest volume, clearest trend, and most aggressive buying or selling. Okay, we're looking for momentum. There's no secret to trading. We're just trying to find that stock that has a ton of momentum. We can pick it up on a bounce. Maybe it has a lot of bearish momentum. We could take it on a reject. Okay, so if you're looking at all 8 stocks, right? Because I have 8 stocks on my left monitor, 8 stocks on my right. I always have SPY and QQQ, which are, the big ETFs, so I can kind of track what's going on in the overall market. And then I already showed you guys my watch list, but here's 6 of them right here. So Apple, AMD, Amazon, Boeing, BABA, Beyond, right? So I'm looking at all of these. All I'm doing is looking at this monitor on my left monitor. I'm looking for some momentum. Which stock is going to give me momentum today? And if you look at each one of these different charts, you can see they're all pretty much sideways. They all have pretty decent volume. I mean, Beyond doesn't have really any volume down here at all, but they all have okay volume. But then we look at Boeing, and Boeing is the only stock out of all these 8 that has high volume, right? You see an increase in volume actually as the stock is coming up. So in the morning, these first 1, 2, 3 minute candles, there was an increase in volume as the stock was rising. So rising stock price, rising volume, healthy uptrend, right? We also have a clear trend. Boeing opened at 225, and within 20 minutes was over 230, right? That's a clear trend. Nice little pullback here, and actually broke out of the second pullback. So it was creating higher highs. And then we had aggressive buying, which you can see on the chart if you're watching it at the time. This is just a screenshot, so you can't really see it. But that's mostly what you're going to be seeing in times and sales, all right? So remember, I talked about times and sales. It's all the orders that are coming through. And in Boeing this day, I saw a lot of momentum. So I decided to pick it up on a dip, which I did after this. So you see this first candle right here. After the second one, after that 9:40 a.m. candle closed strong, that's when I picked it up on one of these little dips in here, all right? One of these lower wicks around 229. And I made a nice move as it kept going up. So remember, finest stock, highest volume, clearest trend, most aggressive buying or selling. Now I want to show you also how you can use level 2 for entries on breakouts. So when buying calls or longing stock, don't enter breakouts to the upside until the bid is over the level. When buying puts or shorting stock, don't enter breakouts to the downside until the ask is below the level. So maybe this can help you out with some false breakouts, right? So let's just look at this example so I can kind of show you what I mean on actual chart form and level 2 form. So you can, this statement will make a little bit more sense, right? So here's the Shopify example. This is from May 11th, and you can see the chart here, Shopify 5-minute. So the key level was 737, right? Because that was the intraday. It had a nice run in the morning. It opened like low 700s down here, made a beautiful run. And then, before 10 a.m., really, I guess this is about 10 a.m. So within 30 minutes, it made it just a nasty like $20 move. And it created this little intraday resistance at 737. So it rejected 737. It came up about an hour later, tried to hit that level again, rejected, came up a couple hours later, rejected that 737 a bunch of times, right? So you can clearly see that resistance. That's where the stock was coming up, and then it rejected, and it was not able to break that again, okay? So 737 was our resistance. And then finally, it had enough volume, which you can see down here at the bottom, to break out of that 737. There was enough buying pressure, and that's how the stock was able to continue rising. So that sell wall, there was enough buying pressure to break that sell wall, to break that resistance, and there you go. In return, we get the increase in stock price. So that's what the chart looks like. Here's what the level 2 looked like, right? So we have 737, 737, 737, bunch of different exchanges, all shorting 737, right? And this was back on demand, but there was some stacking at the 737 as well, okay? So a lot of different pending sellers, a lot of sell wall right there at that 737. So you can just kind of see what it looks like on the chart. Also what it looked like on level 2, right? With the stacking at that 737 level. So first break of 737, right? This is the first time it broke that 737. The ask was 737.33, which you can see right here. And the bid was 736.74. So remember that rule that could help you with some false breakouts. Don't enter until the bid breaks above the key level. So you want this left side to clear the level as well, right? So if you're watching level 2, you're watching a key level, you want to make sure that the bid can get over that level and start holding it, right? So you want to see buyers stepping in above that, above the key level now, so above 737, right? So this was the first break. It was at 2:03 p.m. Here's the second break. The ask is now 737.83, and the bid was 737.27. And we have some buyers that are going to hold above that level. So remember that rule that I said? Enter when the bid is above the key level on a breakout. Note time difference. So now it's 2:08 p.m., 5 minutes later. And that's finally when the bids were able to break that level. And these are your pending buyers now that are going to hold up that resistance, right? So it broke that 737 cleanly, 2:08 p.m. now. And the Y is in the chart, right? So using level 2 to determine entries saves you from fake outs. if you had entered the original break of 737, you would have been sitting in the trade for almost 10 minutes, kind of hoping it goes your way. You can see the amount of times it actually broke the 737, but never really broke it, right? So one thing you're looking for, especially on resistance breakouts, is a lot of volume to come in, okay? So you can see at that 2:08 p.m. when those bids cleared the 737 and both sides clear, there were buyers now holding up that level. That's when you could have gotten in the trade at that 2:08 p.m. down there, right? When that volume came in and the stock just took off from there. Right, so you can actually use that level too to help avoid fake outs, false breakouts, whatever you want to call them. And that might help you if you want to check that out. Entering on bounce plays, very simple. So these are just bounce plays in general. Okay, so I have a lot of different ways that I bounce and reject as well. All three of us have our different strategies for that. Like I said, I like to use moving averages a lot. So like in the mornings, what did I bounce today? I bounced Beyond and I bounced Amazon. Those were just based on moving averages on the hourly chart, right? So let me check. Actually, we can do it together in a second. So entering on bounce plays, very simple. So like, you're waiting for the price action, right? Whether to the upside or to the downside, whether it's an uptrend or a downtrend. You're waiting for the stock to pull back. So like in a NVIDIA short, for example, since I haven't really talked about the short side very much, it's the exact same concept. It's just the opposite, right? So in a NVIDIA short, you're looking for bearish price action, stock to start falling. Not a ton of volume here, but the market was overall bearish this day. So basically, as soon as it gets close to a moving average in a downtrend, remember the ADMA is the one you'll want to use after a sharp downtrend, right? You can use the ADMA, which is this purple line, or the 21 EMA is a little bit more gradual. So maybe around lunchtime, you can use that 21 EMA to take rejects off of that. And then this VWAP right here is kind of the most gradual flat line. And you're just looking for a reject or a bounce off of that sometime, usually midday or later day. So same thing here. Again, you're looking for a downtrend to form and you wait for the stock to pull back and you're rejecting, you're buying puts, whatever, you're shorting the stock after the stock has created a downtrend, right? So again, ADMA you'll use for sharper price action. 21 EMA you'll use on a bit more gradual trend, so a bit more gradual downtrend, usually around lunchtime, somewhere 11 a.m. to 1 p.m., somewhere around there. You can get a nice bounce or reject off the 21 EMA. And then VWAP, if it ever gets back up to that, you can take a reject there as well. Planning proper exits. So use charts to go back in time to see where potential support and resistance will hit. So using that same shop example, we can look at the 1 hour chart to determine proper exits based on historical data. So really the only thing you're doing when you're planning an exit is you're going back in time to see where there's the next support or resistance. So you can kind of plan, oh, maybe the stock will reject at this level, right? So if we're looking at that Shopify 1 hour chart, 737 was that intraday breakout we were looking for, right? That resistance breakout after this nice, beautiful run in the morning, right? So that 737 was the resistance breakout. So we go back in time now and we're seeing, all right, well, it looks like there was a double top here at the 739. There was a reject day 1, reject day 2 at that 739 level. All right, so maybe that'll be my take profit 1, right? That's the first spot I'll consider taking some of my position size off. And there was also like a reject at this 742.50. It was only one reject, so I wouldn't put a lot of importance into it, but that's maybe something to consider. All right, so you can use these as take profit zones. All you're doing is you're going back in time, finding where the stock had prior support or resistance, and you're using those as levels you could potentially take profit. All right, so like the 739, take some profit there, 742.5, take some profit there. It did have a lot of volume, which I showed you on the last chart, that 737 breakout. So it was able to break through that old 739 reject without any problem. But you can actually see this is kind of cool. So 739 was our old resistance. and it became new support after it broke out of 739. So broke through 739, got a nice little bounce off of that old resistance, new support. So it's not too complicated. You're just going back in time, trying to find prior support and resistance. So use the 1 hour, use the daily chart. Those are going to help a lot for finding proper exits. Here's just an example from September. So I was watching SQ 164.5 for a move to 166. So again, this was a breakout trade. How did I determine 164.5 entry and 166 plus take profit? Well, you have the uptrend. So again, this is one thing we're always looking for, is some sort of trend to confirm our sentiment, our direction for the stock. So 164.5 was the double reject from the previous day. So we have 1 day, 2 day, kind of 3 day uptrend with the gap up. It sold off a little bit. You know, it was getting a little tired on this 3rd day of the uptrend. So it rejected twice off of this 164.5 on the hourly chart. And the next day it gapped up again. So that kind of confirms, all right, well, it's still pretty strong if it can reject and then continue in the trend and gap up another day, right? So that 164.5 was just based on the previous day high. That's all that entry was based on, right? So it also had a 1 hour supply channel, which I'll show you now how I got 164.5 and 166. So this is just a zoomed out version, but it's the same chart, right? You can see those double wick rejects on this 3rd day here at 164.5, all right? And then we're going all the way back in time now. So there's just gaps in data because there's no other candlesticks in this area all the way back until the beginning of the month, right? The beginning of September here. So that 164.5 again was a little zone right here because it rejected multiple times off that 164.5 on September 2nd, right? So we have these rejections on 164.5. We have the previous day rejections off of 164.5. And then we have, here we go, our old support, which is going to act as new resistance, 166.40, okay? So this is a 60-minute supply channel, right? Because we have a gap in data from 164.5 to 166.40. So 164.5 entry, 166 plus take profit, because the stock should flow through this level and hit that old support turned new resistance. So what happened exactly, you can see right there, SQ cleared 164.5 at the bell on high volume and hit a high of 167.56. It actually rejected 166 exactly, right? Which was right here, the second reject. But then again, you know, you can wait for the stock to break out, see if it can hold the level, and then buy into a dip. That's the proper strategy you should be doing on a daily basis, right? Wait for it to break out of the 164.5 and then pick it up on a dip. And how to properly take profit on bounce plays. So these are for intraday bounces. I'm not talking about our major hourly bounces. I'm talking about intraday bounces off of moving averages or VWAP. So pretty simple. On strong downtrend early morning, short just before it gets to the ADMA. So once you have a sharp a drop in price, a sharp rise in price, you're looking for a strong uptrend or downtrends like this NVIDIA opened at 366, I think, and then made a low of 354 within just 25 minutes here. All right, so that's a pretty sharp downtrend right there. It's a lot of bearish price action. So you wait for the stock to pull back a little until it gets to basically the ADMA. And again, you're just using that for an assist. It doesn't have to be exact. You can see it even broke it a little bit right here. You're just using as an assist of when you should start rejecting the stock, right? So that day, this was not, I mean, it wasn't crazy long ago, but I shorted like 358. Your stop loss in this example would be like if it broke 360, right? Because that's just, it's going totally back up against that downtrend, right? And that's that whole key number 360, right? So to calculate where to take profit on these rejects and bounces off of moving averages, calculate the difference in price between the bottom before price started reversing to the top where the ADMA rejected. So all you're doing is you're taking that number, you're dividing it by 2. You could do it mathematically, or you can just eye it, okay? So you're basically taking the bottom of where the stock starts retracing back to that moving average, right? Where it's pulling back, and then where it starts rejecting again, right? So now it's turned back bearish, and you're just cutting that move in half. You cut that move in half, and you should hit the rejection sweet spot every time. And you should, start considering to take most of profit right there. And you can hold on to your position, no problem, but you can start to consider taking profit. And with this beyond short, so after a downtrend all morning, right? Again, we're just waiting around like lunchtime. So this is 11 a.m. Short just before it gets to 21 EMA. I shorted 136.50, right? So we have our 21 here. You just want to short a little bit before. Try to hit one of those hold numbers, or half a hold number like 136.5. And again, to calculate where to take profit, calculate the difference in price between the bottom before price started reversing to the top where the 21 EMA rejects. Take that number and divide by 2, right? Or you can just eye it again. So you're looking at where the stock starts retracing back to the moving average, and then where it starts rejecting, you cut that in half. So that little diagonal move there, you'll cut that in half, and that's where you should start taking profit on most of your position. So now I want to actually exit this, and we can just take a look at the Beyond and Amazon from today. I think that would be a good thing to do. Let me just pull this up. 1 second, shouldn't take long. Okay, let me switch this, put this. Can you see TradingView now? Okay, perfect. All right, so let's just take a look at the Beyond and Amazon today. So again, we're talking about just generally how we trade, right? We're coming to the end of the course, so we might as well today, tomorrow, we're just throwing everything at you so we can show real examples of what we did today, what we've been doing this past month, past couple months. I'm talking about a ton of trades tomorrow, okay? Well, let's just talk about this Beyond and Amazon, right? So Beyond had a very strong day one. You can see here, okay? So it actually opened down here at 68. It made a nice move to 72. That was yesterday, okay? That was yesterday. And it's also in an uptrend. So this uptrend started actually on December 6th, which was Monday. So Monday started the uptrend. Tuesday, we had a nice another little gap up, which created more of the uptrend, okay? And Tuesday also made a nice move up and closed pretty strong. Lost some of its highs, but there's no problem with that. So all I was doing today, I wanted it gapped up again, right? So it gapped up again. It closed like 71 right here. And then this morning, I saw it up at like 72 again. So it gapped up again. So all I wanted to do on Beyond was take a bounce off of demand, which you can see right here. All these moving averages. This is just a combination. This is a variation of the 21 EMA, right? So I showed you guys, I kind of like to have a group of them. So I'm not just seeing one line. My eyes are awful. So it helps to see a bunch of different lines around the same level, right? So I have the 20 EMA, 21 EMA, and I think the 22 or the 19, right? So they're basically the same length, right? They're all kind of at the same level here. But then we made a nice move up. So it was also, the bounce today was also the previous day support, which you can see right there at 70.70. Right, if I can just draw a support, 70.70 was that previous day support. It was also our rising demand right here off of our 21 EMA. And so that's why I wanted to take the bounce on Beyond today. Nothing more, nothing less. Okay, not too complicated. I posted 70.5 to 70 bounce. and it wound up bouncing at 70.38. Okay, so that was a really nice trade, as well as Amazon. Oh, you can also see the pre-market. So the pre-market low was 70.20. That's another little area of demand. The previous day high was 70.13, at least that the intraday high from the morning. This is just all areas of demand, okay? So these are the things we're kind of watching. But again, we have our day one. This was the start of the uptrend. Day two continued the uptrend. So today I wanted a bounce off of demand. Day three uptrend. Now let's take a look at Amazon. Amazon had a very strong day yesterday. Very strong day yesterday. It gapped up big. So it closed on Monday at around 34.25. And then on Tuesday opened up here at 34.90, right? And you can also see Monday right here. So Monday, strong uptrend started. Monday, we opened down here. Well, it actually opened up here, but it made a low of 33.40, and then a high of the day on Monday of 34.75. So a beautiful run on Monday. Day two, on Tuesday, we gap up again. So this is confirming now our uptrend. Day one strong, day two gap up. You could have even bounced this day two. You just bounce it off of the previous day high, okay? And now we have our day three, which was today. So I bounced off of 3,500. I posted in the chat. It was actually a beautiful move within the first 5 minutes, and then it just kind of faded a little bit. But again, we had our uptrend form, right? Monday, day one, strong. Tuesday, day two, strong, gap up. Today, didn't really gap up, so I didn't want to take this massive, but you can kind of see this 3,500 area of demand. So we not only have our demand on the 21 EMA, right around 3506, 3507, okay? But then we also have our previous support, 3,500. 3,500 is also a very key psychological whole number, okay? So you can kind of expect big stocks to bounce off of those levels, and it really did nicely today, right? You can just see 3,500 just has a ton of demand around it. It was a big support at the end of November here. You can see it was a big resistance in the pre-market on Tuesday, right? So 3,500 was the level I was looking for, and we got just a beautiful 30-point bounce off of it this morning. All right. So those are just some of the trades from today. And again, tomorrow I'm going to be talking about a ton of trades, good trades, bad trades. And that's all I have for you guys today. So I'll be passing it off to Unraveler.
Thanks, Mike.